Good morning, everybody. This is Live Trading Talk with Patrick MontesDeOca for January the 7th, 2022. We're going to jump right into the signal that we left open on the swing last night in silver, long at 22.17. The stop that you want to use, protective level, could be 22.02 or a trailing stop. The market has a target of 22.76 on this position. So let's watch the market here for a little bit, and I would like to share with you the most recent video that we produced for the Associated Press. Bear with me for 1 second, please. This is the Equity Management Academy Mean Reversion Trading Weekly Seeking Alpha Premium Podcast for January the 6th, 2022. A cyclical bottom is imminent for Bitcoin, gold, and silver. Summary. The markets are volatile today due to the Fed talk about tapering and interest rates. The 10-year note has spiked in the past week from 130 to 173 near the previous peak. If interest rates continue to rise, it will put great pressure on the economy. Omicron is spreading like a wildfire as children returning to schools where some are not vaccinated continue to disrupt the economy. The fundamentals for metals are very bearish, MontesDeOca said. This is usually when long-term bottoms are made. Fundamentals. The markets are volatile today due to the Fed talk about tapering and interest rates. the Fed has decided to taper down about 30 billion a month. So in about March, we will be done with the tapering. The 10-year note has spiked into the past week from 130 to 173, near the previous peak. It looks like interest rates are causing a major double bottom on the 10-year note. Equity Management Academy CEO Patrick MontesDeOca said, if we break out of this neck, we will be testing the $2 to $2.50 levels on the 10-year note. If interest rates continue to rise, it will put great pressure on the economy. Interest rates are saying that inflation pressures are increasing, and the Fed will have to react in some fashion. So far, all the Fed has done is talk. They always leave room to change their mind if the economy dictates it. The Fed was looking at a 2% inflation target as an indicator to raise interest rates, but now their argument is to wait to raise interest rates when unemployment normalizes. Omicron spreading like wildfire as children's returning to schools, where some are not vaccinated, continue to disrupt the economy. Sports events are being shut down. Some schools are back to remote learning. All signs that the economy is still facing challenging issues and uncertainty. The fundamentals for metals are very bearish, MontesDeOca said. This is usually when long-term bottoms are made. Gold. Gold is down $36 and silver is down about $108. It is a highly volatile environment. The market appeared to be factoring in all the bearish fundamental talk. According to the variable changing price momentum indicator, gold is extremely oversold, and we are in a major area of support between 1803 and 1875. Trading below the average of 1817 gave us a bearish price momentum this morning. Gold came down below the weekly average price of 1817 and activated the extreme levels below the mean, a buy signal. The bottom appears to be imminent. A close above 1794 will confirm that the bottom is in. The buy 2 weekly level is 1775, which would also confirm the weekly bottom. If you are an aggressive trader, you can start to accumulate positions in this area and use a stop on a close below 1775 and see what the market does. Silver. Even though the gold price came down, you want to look at these levels for the sign that we are beginning to revert back. The price has come down to a level with a highly probability that the market reverting back up towards the mean. Silver made a low of $22 and it is extremely below the daily and weekly means. So the market is very oversold. A close above $22.75 on a weekly basis would confirm that the market is going to revert back up. We are activating a monthly alert signal if we close about 2202. A monthly buy trigger will be activated. The fundamental news about tapering Omicron and tapering appear to be making bottoms in silver and gold. We are looking to capture this bottom. The fundamentals appear to have been discounted by the markets. Price momentum versus trend momentum. The last price is not the mean price. The mean price is the average price for a given time period, day, week, month, or year. The price momentum is the velocity of the price within the broader pattern or trend, which is the trend momentum. For silver, the bigger trend is bearish since 2542, which is the trend momentum. The price momentum is based on the 15-minute bar to activate signals based on the VCPMI's artificial intelligence. The price momentum can go with or against the broader trend, momentum, or trend. Bottoms are usually made on a counter-trend basis. They usually turn the market on a shorter-term basis and then spread to the longer-term time periods. So bottoms start with a 15-minute bar, then the daily numbers, weekly, monthly, and finally the annual prices. Bitcoin. We are in the area of accumulation of supply for Bitcoin based on the weekly and daily numbers. The daily buy trigger is at 42,170 and the low is 42,375. So we are approaching that, what may be a major buy-in opportunity long-term for Bitcoin. The market will either come down and activate this level or move up and close above 43,883, which will activate the weekly signals. Energy markets. Crude oil is trading at $79 or $80. There has been little news about the energy markets, but such prices are not positive for the economy. It is a sort of a tax on the economy on top of everything that is going on fundamentally. This puts the Fed in a difficult position because the danger is that the economic impact of Omicron could slow the economy. It could put a brake on tapering and on raising interest rates. We will probably find that the markets have overreacted to the interest rate rhetoric because nothing has been done except some tapering. Then the markets will revert back to the mean. Once all the liquidation of margin calls and stops are completed, the real buyers will enter the bigger trend. The bigger trend for gold, silver, and Bitcoin are toward much, much higher prices as the stimulus policies around the world continue to be robust. If the Fed has to alter interest rates, then the markets will react violently to the upside. It will become clear that interest rates will need to go deeper into negative territory. Be patient. We are coming into an incredible opportunity on the long side of gold, silver, and Bitcoin. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ema2trade.com, or listen to any of our previous episodes. Let's go back here to the charts and take a look at silver, which was the signal that we basically are following here. You can see today was a choppy market based on the news that came out, the economic news that came out regarding unemployment and the economy. And it looks like the metals are beginning to detach themselves from the fundamentals here as they are approaching what appears to be some major levels of support. The silver market is coming into a major area of support between 2202 and 2068. This area recommends for you to consider accumulating supplies at these levels if you are a multiple position trader. The market trading above 2202 has activated a monthly buy trigger unless we close below 2202. Closing below 2202 will neutralize the signal, and basically we will wait to see what the market does in terms of coming down, if it does come down into this area, which is a high probability area that the market could revert from here if activated. You can already see the synergy here by the market coming down on the 6th at about 5:30 a.m., completing the target from the average or the mean price of 22.75, which essentially activated a bearish price momentum and activated and opened the target of 2202, and we've been trading around this area now since 1:45 a.m. on the 6th. So there is a point in the market where it separates the real traders from the rookie traders that use the fundamentals. The futures markets tend to, that's what they call it, the futures markets, they tend to get ahead or anticipate the future price based on the fundamentals, based on the exchange of the supply and demand, irregardless of the fundamentals. This is the market. And so what the fundamentals can do is it can either drive the market to extreme levels of speculation above or below. And if we focus on silver for a minute, silver is down about 14% in 2021. And it's hard to comprehend because silver is not only a monetary indicator, but is also an indicator that pretty much gives us the pulse of the economy. and it has an industrial application, it has a medicinal application, now it has a technological application. And as we move into this environment, this inflationary environment, not only here in the United States, but globally, it is my belief that while the price of silver is at these levels, it's an anomaly. It's a historical anomaly. And you can't ignore it. When all is said and done, with all this new technology or, technological applications, they find their mean. We're going to go back to looking at gold and silver as a real store of value. And it's not a question of what's better. Is it Bitcoin or is it gold or silver? It's integrating both products, both assets into a portfolio correspondingly. Bitcoin is becoming a force to deal with. It's accumulated pretty, at the peak, almost $1 trillion in capitalization, if not more. And this is in a short amount of time. And the interest is growing. The acceptance is increasing institutionally, and the technology is making it real easy for people to invest in Bitcoin. You can do it now through applications, through PayPal, Venmo, where you can just convert your cash to Bitcoin. Whatever amount you have, at the click of a button, you can convert it to Bitcoin. So it's a new technology that is growing by leaps and bounds, and it's something that we have to address as part of the, you might say, classic portfolio that essentially needs to be upgraded into this tremendous advancement that we are seeing in technology. Obviously, the digital assets got ahead of themselves. High levels of speculation took place. With the amount of easy money available, the amount of stimulus that was in the market, it was a perfect recipe for the speculator to increase tremendous amounts of leverage. And as the different levels are being created from the basis of Bitcoin, it's just an amazing way that you can leverage. And I think we reached the peak in Bitcoin of leveraging when we got to 63,000. I think the market got ahead of itself, and regardless, its average in terms of annual returns has been nothing like we have ever seen, stocks or commodities. But it is volatile, and you want to manage not only the risk, but also what instrument you are applying to. And I think the market is growing in liquidity enough that derivatives are going to be made available and are available. It's just a question of liquidity. Coming back to the silver market here, we are holding our swing position in silver with a target of 22.75, which is the main target, the average price. And if we do trade above the average price of 22.75, then we're looking at 24.08 to 24.94 as a target for the rest of the month. So continue to hold your long position. And I will see you next time, my friends. Take care. We'll talk to you soon.